Hello from the Green City in the Sun, Nairobi, Kenya. My name is Juliana Rotich. I'm venture partner at Atlantica Ventures and a technology entrepreneur. I will be your moderator for today's session on green investments for the financial sector. Thank you to everyone who has joined this session. Welcome. We have a great group of panelists. As I prompt each of them to briefly introduce themselves, I would ask that they share what is their favorite thing about the country they're joining from. It can be anything from the use of green energy, financial inclusion rates, country resilience in the face of COVID-19, or even baby elephants, whatever is interesting and your favorite thing about your country. And in the chat, please do share with us which country you are joining from and your favorite thing about it. We will start with Anne-Marie Chidzero. Welcome.
Thank you very much, Juliana. It's really a pleasure for me to be here. My name is Anne-Marie Chidzero, and I am the Chief Investment Officer of FSD Africa Investments, which is the investing arm of FSD Africa, a facility to support development of the financial sector, and we're funded by the UK government. And I'm here in Kenya, in the beautiful country of Kenya. And what I have to say, what I love about Kenyans, besides the fact that you have a beautiful country and wonderful coastline and wildlife, that the Kenyans are really resilient and really taking on the challenges that we're facing today with the pandemic, but also just willing to do what is necessary to address the changes that we need to make as we green and create more sustainable economies. Thank you.
Great, thank you very much. We'll move forward to Kaye Brathwaite.
Hi, good morning. Kaye Brathwaite here from the sunny, beautiful island of Barbados. I am the CEO of Invest Barbados, which is the government's statutory body which look for sustainable investment into the country. And what can I say I love about Barbados? Everything, basically. It is a wonderful place to live, work, and play. So basically, we do have it all down here. I mean, pandemic aside, we've all have the impact of the pandemic with the various sectors, and you'll hear me speak about that later on. But, you know, all in all, I think we handled it pretty well. I think we were able to keep our numbers down and to still allow our citizens to still enjoy life and even invite people to come and enjoy life in Barbados. So it is a wonderful place to be at this point in time, and glad to see everybody on the panel and looking forward to chatting with you as we go on. Thank you, Juliana.
Thank you very much. And Peter Sullivan, where are you joining us from?
Hi, Juliana. I'm coming from London, UK. I am the head of the public sector business for Africa at Citibank. So work with sovereign central governments and developmental organizations looking at particularly sustainable finance. Can't really point out one thing I love about the UK, other than it's never boring, at least from a political point of view, as we jump from one political crisis to the next, whether it's COVID or Brexit. So the newspapers are always quite interesting.
Fantastic. And last but not least, Wycliffe Shamiah, sorry, welcome.
Thank you, Juliana, and all who have joined us this afternoon. And I am the CEO Capital Market Authority, a regulator of capital markets in Kenya. I think I want to say thanks to Central Bank for inviting some of us to be speakers today. But just to say, as we speak about resilience, I think I'm so happy to see our capital markets being resilient during this time of COVID. I can tell you, if you went by the measure of activities at the exchange, it has been wonderful, although obviously some slights, but I think generally from expectations, we've done very well. The market has remained very resilient, although also, we depend on foreign investors, but we have seen them, of course, participate even at times when it was very difficult. Thank you, Juliana.
Thank you very much. To introduce the session, one of the things that we have seen is that over the last decade, we've seen an evolution of banks and corporates aligning their business with sustainable development goals and redefining the idea of corporate social responsibility. There are various examples in Kenya, from Safaricom to Kenya Commercial Bank, releasing sustainability reports that show benefit to society. And the conversation around environmental, social, and corporate governance is now a global one, and it's a continuing conversations. In some of the reports that we see, not only in Kenya, but globally, there are specifics about green investments and green financing. We see companies being very clear about their impact initiatives, how they're empowering individuals and businesses to align with goals. There is welcome news of Kenya Commercial Bank getting Green Fund accreditation and IFC allocating money for green finance small enterprises. So the sources of green investments into the financial sector are local, regional, and international, or a combination of all three. Underpinning all of this is the partnerships that span DFIs, telecoms, banks, fintechs, and governments to help drive the flow of money, action, and hopefully impact. So let's go to Barbados, and I'd like to welcome Kaye Brathwaite. So considering the Sustainable Development Goals and the current global crises, what are the opportunities to make green investments in the financial sector on a country level in the case of Barbados? Welcome.
Thank you very much, Juliana. Obviously, protocol having been established, it is a very pleasant day to you. It is very, very early in the morning in Barbados. It's around 8 a.m. Thank you to the organizers of this summit, and by extension, the Singapore FinTech Festival, for providing a virtual platform where countries across the globe can collaborate on issues vital to the continued development and success. Thanks for the invitation to Invest Barbados to participate and to share how our investment landscape is shaping up amidst the current global crisis. The ongoing pandemic has impacted the entire world. We too in Barbados continue to manage the risks. To date, there are no cases of community spread, and our borders have never closed, with Barbados maintaining a welcoming climate to live, work, play, and invest. Although our major economic earner, tourism, has been severely affected, I am pleased to report that Barbados' global business sector, which contributes significantly to the country's gross domestic product, has demonstrated resilience and performed reasonably well under the circumstances. In fact, for the first 9 months of the year, our central bank's review of the Barbados economy reported substantial revenues gains from the corporation tax. Additionally, to counter our tourism losses, our government has introduced the 12-month welcome stamp visa, inviting visitors, so all of you are always welcome, especially digital nomads, to live, work up to 1 year in paradise. The program has proven to be popular with the global business community and is a reminder that Barbados is much more than just a tourist destination. The entity that I lead, Invest Barbados, is an economic development agency of the government of Barbados, responsible for attracting foreign direct investment, collaborating with public and private sector partners to develop and manage our business brand. Our major focus is to deliver value to our investors, and in doing so, prioritize the landing of investments that are sustainable, feasible, and ecologically sound, for those which will create quality jobs and bring transferable skills and new technologies, investments that enhance the economic and social development of Barbados. Though faced with the uncertainties of the global pandemic, Barbados remains open for business, more specifically for businesses of substance. We are a welcoming jurisdiction that has consistently built a reputation underpinned by transparency, stability, and compliance based on a country brand that symbolizes excellence, productivity, imagination, and innovation. Our global business sector is among the bedrock of our economy, bringing foreign direct investments to our shores, creating employment, generating revenue, and enhancing the social well-being and quality of life of our people. The sector continues to stimulate economic development and provides access to advanced skills and technology, generating mutual beneficial impacts for the investor as well as Barbados. Our landscape remains attractive and ripe for foreign direct investment, spanning the traditional sectors such as financial services and information communication technology, to the emerging such as financial technology, medical tourism, renewable energy, and niche manufacturing, as well as yet untapped areas including artificial intelligence, medical cannabis, and other high-value agro-industries, the management of life sciences, culinary sciences, robotics, data and cloud engineering, cybersecurity, e-health, and e-education. We are aiming to be among the best and will continue to attract investment that helps propel our pursuit of sustainable development. One of the sectors which typically attracts impact investments here is renewable energy. Barbados is committed to the ambitious goal of 100% renewable energy by 2030. The impact would lead to significant savings in foreign exchange, while contributing immensely to improvements in the health and well-being of our residents due to the reduction of carbon emissions. According to the Central Bank of Barbados, the country spent over US $364 million in the importation of fossil fuel products in 2019. This is simply not good enough. Formal recognition of green policy objectives in Barbados can be traced to our National Strategic Plan 2006 to 2025, but efforts have predated 2006 as well. According to the United Nations Environment Programme, in 2002, Barbados saved 15,000 metric tons of carbon emissions and over 100 million US from the 35,000 solar water heating systems installed at that time. As of 2008, approximately 40,000 solar water heaters were in operation in Barbados, and this number has increased yearly. Presently, approximately 60% of our householders have solar water heaters, and the country is ranked 5th in the world per capita in solar power. Barbados remains number one in the world in the British thermal unit solar water heater capacity per 1,000 population. So what can we say? Small in size, but big in impact. More recently, Barbados has geared up on the solar PV installations. Government has a solar PV installation on many of its buildings, including its schools. Banks and other financial institutions offer loans for such installations. You may be pleased to learn that Barbados is a global leader in the per capita use of electric cars and leads the Caribbean in the introduction of electric buses into its public transport fleet, saving thousands of dollars in fuel consumption, while considerably reducing the level of carbon emissions into the environment. In terms of green financing, Barbados has had some success there. At least one investor, who is one of the largest independent power producers, launched a green bond program and continues to expand this program. These bonds have earned regional and international recognition. You can find more information at https://williamscaribbeancapital.com, Green Energy Projects. Several leading experts agree that the outlook for impact investments is positive. This clearly substantiates my earlier statement, the tremendous investment opportunities that are potentially available to small developing states like Barbados. In summary, Barbados is seeing growing interest in the areas typically associated with impact investment. You have renewable energy, agriculture, food security, education, healthcare, the environment. We are seeing interest in the investments that enhance lives and livelihoods. As a small open economy, Barbados recognizes that attraction of sustainable FDIs will be integral to our success, and we are actively aiming for recovery and robust growth post the COVID-19 pandemic. Ladies and gentlemen, Barbados is open for business and offers a welcoming investment climate. You are invited to consider Barbados. Thank you very much.
Thank you very much. And I'd like to welcome Anne-Marie Chidzero. I think you'll agree that we all cannot wait to come to Barbados.
Yes,
when
definitely. I'm coming.
Yeah. In your stellar career of building financial markets, do you see this trend of aligning business with impact imperative continuing, and specifically around green investments in the financial sector? What are the frontiers that you are seeing or looking forward to or would like to see more of?
Thank you very much, and I really will be brief. Yes, we are seeing the interest in the financial market and in the investment capital landscape, a keener interest in greening. And I think COVID-19 has really allowed all stakeholders to really come to the table and be much more conscious about the need for sustainable development, the need for greening our economies. What we're doing at Financial Sector Deepening Africa and with the investment arm is we are looking at finding ways in which we can attract more capital into this space. So really demonstrating the investment return that can be made not only financially, but in terms of the impact on the economy and how that creates more sustainable development. So we're looking to invest in different types of structures that would help blend the investment return. So it would therefore attract capital that is looking for opportunities to invest in green, but they have also a particular mandate that they need to kind of stick to in terms of the returns that they're looking for. And so we're looking at different ways in which to structure platforms to attract different pools of capital into green. So when I say green, it could be energy, renewable energy, cook stoves, for example. It could be conservation. Here in Kenya, as I said at the beginning, beautiful, absolutely beautiful natural landscape and wildlife. How do we protect that? COVID-19 certainly had a huge impact on the economics of conservation, but how do we protect that? How do we make this an asset class? That's really what we're looking for, is to make green an asset class. So not only is it about greening finance, it is about financing green. And I'll stop my comments there. Thank you.
Thank you very much. And I'd like to now invite Mr. Wyckliffe Shamiah. Are there opportunities that you see for this idea of not only financing green investments, but then also figuring out interesting instruments in order to be able to make this an asset class? Do you see this being a bottom-up movement, or will we continue to see it being top-down, where resources cascade from multinational funds, or are there local innovations or partnerships that the Capital Markets Authority is seeing or wanting to encourage? Welcome.
Thank you, and a very good question. As far as we are concerned here in Kenya, first, just to state that even with the effects of COVID-19, I think in a normal environment, a lot of assistance will be expected because, as you said, economies have been destroyed by the effects of this pandemic. And therefore, even as it comes to financing green, we will still expect a lot of assistance or aid moving from the very huge sources, pools of funds. I know, of course, we have had Green Climate Fund, we have European Union, we have Global Environment Facility, World Bank, among so many others. This will be very necessary because I think as it is practically where we are now, the effects of COVID-19 have actually destroyed so much of the progress that had been made before. But let me just say, after Paris Agreement in 2015, of course, we've had our Marrakesh pledge in Morocco in 2016, where regulators in capital markets and the exchanges came together and agreed it was necessary to stress the issue of environment when entities are raising funds, because we understand the issues of environment must be handled or addressed collectively. And therefore, I can say here in Kenya, we have had so many initiatives under different umbrellas, just looking at how do we grow green? And one of those is around how do we support the green bond market in the domestic, bond market. And I want just to mention around two initiatives, and then I'll talk about what we have done as an authority. The first one being Green Bond Program, which brought together Kenya Bankers Association, Nairobi Securities Exchange, Climate Bond Initiative, FSDA, and FMO, and others like IFC and World Bank, just to come up and say, look, we can have an issuer guide to help those who are interested in issuing these instruments. And of course, to support this, the authority had to issue a policy note guidance so that this is actualized. And as we speak, I think it's important for me to mention, early this year, we had one of the first corporate green bond issuance by Akon, which is now listed on Nairobi Securities Exchange and also the London Stock Exchange. This was a very big achievement for us because I think it just shows the potential and how we can all think about green and, of course, finance specific aspects that will go into contributing to what we are saying, saving the environment. Now, as you will understand, normally the push should be about green, but I agree with Anne that the issue of return comes in. And I want to be very specific in this case to say our experience has been there is also very great interest from the local investors because one, they see it is a good initiative. Secondly, of course, they are looking at returns. And the push has been, can we see more instruments being issued? I'm hoping in a few months we will have this as we go forward. I wanted to talk about one which is being pushed by the government, the National Treasury and Planning has put up a National Green Bond Committee just to oversee progress in terms of if the government is doing some sovereign kind of issuances. And we are all discussing this. It's a very hot debate around here. Should it be actually local or should it be also shared with foreign? So you can see the kind of interest that we have as far as the green bond, of course, issuance are concerned here. But just to stress, as Capital Markets Authority, we have facilitation in terms of how do we look at applications and fast track those applications so that those who are raising funds and those who are willing to give those funds find it more convenient and therefore supporting the green bond market generally in Kenya. As I finish, because of time, I just wanted to mention a few other arrangements which will be within capital markets, but I agree that within the financial sector, there will be many other initiatives. The first one will be Sustainable Stock Exchange Initiative by UN. I think this has been great, and of course, we know we participate at different levels. There is also a Sustainable Banking Network, which is under IFC, again, a very good initiative that we see a lot more of the jurisdictions participating in. I want to speak about IOSCO Sustainable Finance Network, which gives a bit of guidance to us regulators within capital markets on how we need to handle issues around green bonds and green finance. And then lastly, the Network for Greening in Financial System, which is mainly around banks. So for me, I think our experience has been great and we are looking forward. In fact, we are really very keen. The government may issue a sovereign bond. We have had these discussions, and even we seem to see this can also go into Islamic finance, which is important for us. Let me stop at that. Then, of course, we can pick any other discussions thereafter.
Thank you very much. I'll turn to you, Mr. Sullivan. From the panelists, we're seeing a very hopeful and a really clear case for more investment in green instruments. What are you seeing in terms of large institutional investors? Do you see this attention, or do you see what is accelerating in terms of actual investment? What are the barriers? And sort of like from an ESG perspective, just a quick overview from your perspective.
Thanks, Juliana. I wanted to focus on the sustainability bond market because I think that highlights a number of key trends around sustainable financing, which I think are important for the region. And then, really how the region should be reacting to that in order to really mobilize much more sustainable capital. So just last month, the sustainable bond market surpassed 1.1 trillion in bonds outstanding. In 2020, year to date, there's been $460 billion of sustainable bond issuance. And that has been broken down by 50% in green bonds, 30% on social bonds, 17% on sustainability bonds, 2% in sustainability-linked bonds, and 1% in transition bonds. Now, from that breakdown, I think you can draw a few conclusions. One is, the recognition that climate change, renewable energy has been the main driver for green bonds. And green bonds were really the pioneer in sustainable finance. But with the arrival of COVID, there's been a much greater attention about social bonds and sustainability bonds, where there's a recognition that we need to attract this capital into funding SDGs. Now, green bonds will still remain a very key proponent because you're starting to see central banks, portfolio managers, pledging to have carbon neutral portfolios. So there'll still be a very big piece related to environment into renewable energies as we sort of transition of that. But that is also very much focused on the developed world. I think when we look at the emerging markets, it's much more about social, it's much more about sustainability and sustainability linked. Now, what's interesting about sustainability linked, and the definition of there is really where you have bond issues that will sort of move the price based on whether the issuer can meet certain key performance measures or indicators. So it becomes very, very much about measuring that impact and disclosing that impact. Now, I think what's important for Africa, when we think about there's $30 trillion of capital that is focused on ESG, but so little that it actually is flowing into Africa. Now, we're starting to see the headwinds again around sustainability and the social focus and the impact there. But I think what that capital requires is data. And we talk about data as being the new oil. So how do governments, how do issuers in Africa begin to monetize data? Well, first we need to capture that. So we need to build out the digital framework to ensure that the data is properly and accurately captured. So it's managing that data. Second, it's contextualizing that data. So when we think about, a point in time about impact, people look at where's the track record, how can I use this data to predict the future? Well, typically you predict the future by looking at the past. Now, right now you would say, well, there hasn't been much track record. But if you think about the work of the DFIs, you think about the work of donors over the decades in supporting supply chains and building infrastructure assets, they can contextualize that data based on the impact assessments they've always done as part of their mandate. So we need to sort of galvanize a lot of that history, a lot of that track record, to then put into current data capture to begin much more predictability around how the sustainable finance will allow these assets to sort of perform. And then thirdly, it's really the disclosure. I think COVID has again thrown into stark relief the need for greater transparency, the greater for accountability. And it's that data disclosure about disclosing impact, that will deliver that. So I think for Africa to really tap into ESG capital to fund SDGs, it really needs us to be focusing on the data capture, the data disclosure, because data will equal dollars going forward. And I'll just stop there.
Thank you very much. I think we only have just a few minutes, and I'll invite for us to do just there's one question from our audience from YouTube. One of the questions is, what are we doing to fix the problem of unemployment among youth, particularly around how when we're investing in companies or green space, do we have an indicator of if those companies are employing youth, and how do you see that being solved for? Because we have just 3 minutes, I'll invite in this order Peter to just do a closing statement, and if you'd like to answer the question, or closing statement, and then we'll go to Wyckliffe, Anne-Marie, and we'll close with Kaye Brathwaite. Go ahead, Peter.
Sure. I think job creation is so essential, really, to the growth of the region, and it cuts across so many different SDGs, whether we're talking about education, whether we're talking about industrialization. And I think, that needs to be a very key KPI going forward, for people who are looking to invest in projects, invest in businesses, that KPI about job creation, about capacity building, institutional resilience has to be there and put up into the forefront.
Mr. Shamiah?
Thank you, Julian. For me, I think as far as employment is concerned, for us, if the real economy is working and economy is moving forward, especially there is then the required funds that will need to be raised. If we are raising most of these funds, be it through green bonds, we increase activities which then can bring about potential of more people being employed. But particularly, I think it must be something that runs through our mind, that we need to deal with this as nationals. I think at government level, I think it must be a push that the youth need to be assisted in getting the right employment. And of course, this comes back to what is the role of the private sector and the government as we think about this being an issue which is in most of the jurisdictions. Thank you.
Brilliant. Thank you very much. And
I know we're running out of time. Yes. So I think the only thing I would really add to this conversation is we do really need to look at the youth as entrepreneurs as well. And I think if you look at the startup environment, the accelerators, the average age of people who are in that space are the youth. And so we do need to make capital work for the youth. So that means trying to figure out how do we create the intermediaries and the institutions that are going to provide them with the capital so that they can create their own opportunities.
Yes, and what I would say is, yes, indeed, any investment coming into the country, we always look at those job creations and beneficials to our citizens. And of course, you look at re-educating everyone in terms of the new emerging sectors, and the youth will drive that. So definitely, they are always top of the mind: education, sustainable investment, re-engineering, entrepreneurship. Those are the things, the words that we play around when we talk about bringing in investments, especially into these new new and emerging sectors, and especially into the greening investments.
Thank you very much. I hope that everyone that joined us today enjoyed our conversation. Thank you so much to all the esteemed panelists. Thank you to the Central Bank of Kenya and the Monetary Authority of Singapore for convening this. It's been really great, and I hope everyone was able to have an important takeaway. I think for many of us, we're going to be looking at the green bonds. We're going to be looking at the ways that FSD is investing, and also the ways that Citi is also investing in ESG activities. And last but not least, we will one day come to Barbados as soon as we're able to safely travel. The digital nomad visa is, I think, very attractive to all of us here. Thank you again, and over to you, Central Bank.